Right, fam. Welcome to my YouTube channel. All right, so today I'll be talking about the ICT fair value gaps. Right, you know, I was going across some stuff and I came across the ICT YouTube page. Right, he did a 41 video series, all right, on his free mentorship program. All right, so those are 41 beautiful videos, and I came across the concept that he taught for the first time, and I thought that it would be nice for me to bring it to my YouTube community how um, the ICT favorite gaps can be used to profit off the market. I have backtested this. Believe me, I have gone through several studies and I found out that the ICT favorite gaps actually is a beautiful concept, right? Because it's built on the delivery of price algorithm, right? And not only that, I found out that it does not only work on futures, right? When ICT was talking about um, the fair value gaps was focused on futures and forex, right? But I'm telling you that it doesn't only work there. I've back tested and I found out that it works even on the synthetic index market, it works on forex, it works on indices, that's US 30, US 100, J 30. All right, it works on so many stocks, right? I've not checked on crypto yet, so crypto is out of it. But what I'm telling you that this works on the synthetic indices pairs, it works on the forex pairs, the futures, the indices, right, and all of that. So it also works on the CFD to a large extent, right? So this is it. So let's go to the charts now, or let's start with the illustration. So the ICT fair value gaps is based on two notions, right? The first notion is that price is drawn to buy side liquidity and sell side liquidity, right? So I'm showing you how I understand that. We'll go to Richards in a moment. So on how I trade it, right? So first thing you want to see um, the kind of resistance or support to the upside and then to the downside, right? So now I want to say before you trade these ICT fair gaps, number one, you must have a reason to go short, right? He talked about the power of three, that is the accumulation, the manipulation, and then the redistribution, right? This stuff I'm teaching you now does not just work randomly, right? You must have a reason that you want to look out for this setup, right? If you're trying to sell the market, then you look out for this. If you're trying to buy based on the bigger time frame perspective, right? So you're not just looking for ICT fair gaps randomly, right? You're looking out for a reason to sell or a reason to buy, right? So at the top, you have what we call the buy side liquidity, right? The BSL, right? The buy side liquidity. I want to use the BSL, and then at the bottom, you have what we call the SSL, right? The concept of this, I'll explain it. The concept of this is that when the market is making a resistance or a support, there are people that believe that, okay, if the market is not trading up and it should, this is a resistance, right? People that believe that if the market should, break a resistance, right? If the market should, break a resistance. People that believe that the market should break a resistance, right? It should keep going higher, right? It should keep going higher. That's what some people believe. That the market should, break a resistance. It should continue trading higher, right? Or if it comes down and breaks a support, and as well, the market breaks the resistance. The people that believe that the market should, keep trading higher. That's what they believe. So that is the concept of the BSL. So the people they put their buy stops are there at that point there, right? So their stop orders are there, right? Their buy stops are here. So the believe that the market trades are both resistance, right? This is the resistance now. Market should continue by, and there are those that believe that the market, you know, trades down in support, it should continue selling. So that's basically how they trade. Right, so the thing that their sell stops here. So once price just trade through the resistance, their maybe their sellers could be they are both the BSL and all of that. I don't do that, but I'm just talking in theory how why it is called the BSL and SSL. So the buy stop liquidity is at this side and the sell stop, the buy stop liquidity at this side, sell side at this side. So it's based on two concepts. So if that is the first concept, so there are people trading and putting their buy stops here, like they are trying to join this buy above resistance. Then their stops are all gathered there. So that's the first concept. And then there are those that put their stop loss above resistance. So someone is trying to sell up this market, he would do what this is why it's called a buy side liquidity. So if you're trying to short this resistance, your stop loss will be where? Just above this stop. So your liquidity, your stops are here. Money is at this point here, and money is at the bottom part of the trading range, right? So that is how this BSL and SSL come into play, right? So now let's go back to the ICT fair value gap. So when we're talking about ICT fair value gaps, we are saying that we expect to see a BSL and an SSL, right? So the first thing you want to see, you want to know the daily bias or the trend of the market, right? You want to know the momentum of the market. Is it likely to trade higher or is it likely to trade lower? We'll go to charts very soon, right? I'm not showing you this thing so you can see it in your chart and you can apply it, right? So now BSL, stable liquidity, and this is it. So you look at the BSL, SSL, and looking at for this is the gap. So now when the market is you're expecting the market to sell, but this is a bearish day, right? So the market will do this higher high, higher low, higher high, higher low. And then what I expect the market to do was to break through this BSL, right? So I got to go trade through that resistance high. So this BSL could come in form of daily wicks, that is the high or the low of daily candles. It will come in form of session highs and session lows. It will come in form of relatively equal highs or relatively equal lows. And it can also come in form of what? Or resistance and support, right? So now, we want to see price trade through here. So when price has traded through, remember that you're looking to sell this market, right? So you must have a reason to sell apart from just favor value. Looking at we have other reasons based on the daily bias and all of that, right? So now the market is heavily bearish and the market opens and start to go high first. It goes take out the BSL. Now, once the market does this, what are you looking at for? You're looking at for what? An intermediary break of structure and then a fair value gap apply. So you want to see the market do what? Break this low. So this low right here. You want to see the market, break this low. So when the market breaks this low, then you have a shift in market structure. And after that, you should do what? See what? A fair value gap. So now when the market breaks this low, you want to see what? A fair value gap appear here, right? That is an imbalance, right? So the fair value gap is another word for what we call the imbalance, right? So we want to see that imbalance forming after the market has done what. But I will show you a rate chart after this, right? So we want to see what the market break through this and then give you that what fair value gap. So this is your FVG. So remember the concept: market must be heavily bearish for this scenario. So fair value gap at that point there, and then this is an FVG. So this now becomes what your entry. So when the market broke this intermediate this short term low or intermediate low, so price should come back and then give you entry and then you're going down. So now where should be your take profits, right? Number one, you could use what we call the concept of discount. So if you're entering your sell here, you could now measure from maybe the low of the SSL up to the range. So you can be targeting 50% for your take profits, right? Price must not come down to this SSL, right? Remember that when liquidity forming down, it was something like a relatively equal low forming at this bottom. All right, so when we see like an relatively equal low forming here, then giving you that confluence. So now when you're seeing this equal low, this is your overall target. But with the price get there at one move low, may not do that. You may just stop at the 50% and then go higher, right? So you're looking at for 50%. When the price gets to the 50% or it gets to a short-term low, right? Remember that you mustn't treat this all the way down. So you can be taking out your partial, but the price is going lower because 50%, you take out partials. You maybe it takes at a low, take out other partials, and the overall target should was the SSL, right? I will show you this in your chart, right? I'm not showing you the concept, so you can help you understand this in your rate chart, right? I will just show you this so you can see how it pans out in your rate chart, right? So fair value gap at this point here, and then you're doing what? Trading what to the SSL, the sell side of liquidity, right? So it is also the reverse for a buy scenario. So for the buy scenario, it's just the reverse of what we have here. All right, so just the reverse. So for the buy scenario, all right, for this other scenario, so let's assume that we now BSL is still up and SSL is still down. All right, so for this other scenario, we want to see what's liquidity building at this point here at the upside and maybe this was a bullish day. You're trying to what, buy the markets, right? So now you see the market trading to that equal, that's relatively equal high, that's previous day high, that's support or resistance, and it's a bullish day, right? So you set the market to buy because of maybe market structure, the daily bias, and all that. I'll teach you about the daily bias as time goes on, right? So you see this fair value gap, see the market trade into the SSL. Next, you want to find the market break what? This short-term high, right? This short-term high should be broken, and then you want to see that imbalance, proving that market will just wants to come back to what, mitigate, or let's say fill in the imbalance. So open up the imbalance, stop loss maybe above the candle with the imbalance, and then all of that, right? So that is it. So that is just what the favorite can be talking to you. Want to say that break after taking out a significant liquidity point, and then want to see what price rally all the way up, right? So now we have looked at that. So let us look at this thing in real charts, right? So I've explained the concept in theory. So now let's look at the real chart, right? So this is British pounds against the Australian dollar. So let's look out for where this concept panned out nicely, right? So looking out for where we could see fair value gaps, panning out nicely. So let's go to charts. So in a moment. All right, now we are in the Nasdaq charts. So we're trying to see how this thing panned out, right? I told you how it looks like. So looking at the Nasdaq, let me kind of make it visible. So this is the Nasdaq, not futures, US 100, right? So look at this, look at the chart carefully. What can you see? What can you see on this chart? So look at the same concept I told you. I'm just showing you how the fair value gap is treated, right? So look at this. We have buy side liquidity. So you can see that market was, kind of creating a kind of resistance here. Even as price got, you can see that price was rejected, right? And where is our SSL? We saw what the sell side liquidity here. So this low, right? So let's see, okay. So this can also kind of, whatever kind of sell side liquidity or something of that sort, right? So we had a low here, right? All these lows, so setting all these lows to pivot be cleared. So we have the kind of trend line here. So that's also an SSL for me. So it's kind of trend line forming at this point here. So look at what I was telling you about. So we have our BSL and our SSL. So price came, look at our BSL just there. I'm just showing you, right? I'm just showing you how this occurs, right? So the BSL, remember that you must have another reason for doing this, not just fair value gaps. You must have a reason on bigger time frame to sell or to buy, right? This is just an entry model, right? That guarantees profits, right? So you could see that price was, creating a kind of resistance at this point. Even when price came here, look at this, there was a kind of rejection, though what price went above it, right? So remember that we are looking to do what, to sell these markets, right? So now after that, market took out what, the resistance, and then where's our intermediate break construction? Right here. So see this low was broken. So this low was broken. Now, where was our fair value gap? Right, we saw fair value gap all the way from here. Right, so there was a fair value gap all over this point. So there were gaps all over here. Right, all over here. So you see gaps all over this point here. These are the gaps. Right, the gap is that those impulsive candles without retracement. Right, so there were a lot of gaps here and all of that. So we're trying to kind of separate the gaps. Right, so we had a gap from here to here. We had another gap from this week. You just use from between the week, upper week, and the lower week of the candle. So there was another gap here and all of that, right? So now some people will ask, well, how do I know the gap to trade, right? How do I actually maximize this, right? It's very simple. Think out if Fibonacci 2, you want to be trading at discounts, right, or premium level. So from here to here, I'm not showing from benefit of hindsight how you would have made it known. So now you measure from this point to this point, and now you can start from this point is at premium, right? So this was a premium zone from the 50% and upwards, right? So these gaps will not be of interest. This one here will not be of interest to you. So I would have looked at this particular gap here. This one I was what above was the premium level, right? So if I use that concept, then I know that it is now this gap, this fair value gap, right? So this would have been my entry just at the opening of this fair value gap. Just right here would have been my entry using the cost of premium and discount levels. So when I look at this guy, because what, it is above the 50%. And where should my stop loss have been? Just where above this high here. So that would have been my stop loss, just there at this point here. And then do what? We trade first target would have been this low, right? And then overall target this low, right? If you want to hold and take out all these relatively cold lows, that would have still be beautiful, right? If you want to then take out those lows as well, DERIV is annoying sometimes, right? So you can see price, it was it's hit all of it. So let us see how, if you were targeting let me make this also. So if you are entered with that imbalance at what discount level or premium level rather, so my stop loss would have been where above that high, right? To be safe, just above this high here. And I'm targeting what first, the target should have been this low. That was a roughly 1:1.3, not so good. So we would have been best to just target this particular low here. So we have made a 1:2.2 here. Then if you bring out your horizontal ray, just target lows, the PSL for target. So we're targeting to this overall low. So let us see if I head to this low, would have been an amazing 1:2.6, right? So see how this thing panned out nicely. It panned out nicely. So you could see that price it was took out the BSL and then went what gave us a short-term break of structure, and then we see that fair value gap, and then we took price what lower, right? This has been beautifully occurring in the financial market, right? So let's just look at one more example of where this fair value gap panned out, and then we call it a day, right? Now I'm at the US 30, and you could see now we had the markets had captured daily highs. I'm not going to go into all that. I'm just showing you the fair value gap entry model, what it looks like, right? I'm not going to go into the top down analysis and all of that, right? So that would be the next video. So look at this. We had liquidity forming here. So we had what? You can see that we had our what? Our sell side liquidity just resting at the bottom here, right? So we're looking at for a reason to sell, to take out what sell side liquidity, right? So we have our SSL at this point here, right? And then we're looking at for what that's intermediate shift and break. Now, if you are looking at this as, let us look at this. Let us just be hypothetical. So if you're looking at this as your sell side liquidity, look at this. Look at what happened there. Price went above. Did it break through? Nope. Was there a short-term break? There was no short-term break because this significant high was not what. The significant low was not what broken. So we wouldn't have taken this trade, right? Once you see price was break this low and then give us what a fair value gap, right? And as you can see, price did not break it, right? Price never broke that low. So this was a low, price never broke. So that there's no entry there. So we wait. So we want to see that displacement, meaning price taking out the low completely, and then look out for what the fair value gap for entry. So now we are still looking out for what the BSL should be taken out. So look at this now. We now had a kind of relatively equal lows here, right? So look at this point here, kind of relatively equal low. Let me use my trend line to draw it and show you, right? So we had a relatively equal lows here, equal highs rather. So our BSL finally formed there. This is not always picture perfect, right? I know that in the illustration it looks very perfect, right? But I'm not showing you that it's not always very picture perfect, right? So you just have to see that. So I was expecting this market to go down because of it has taken out all the daily liquidity, and there was no reason for you to keep buying, right? So we're looking at this SSL BSL, right? So like I said, price it was traded through that relatively quite high. So took out anyone I was trying to buy, and then where did we see that short-term break? Right here. So you can call this your short-term break, or you can call this your short-term break of structure, right? So we had our break of structure. Now, was there a fair value gap? Look closely. Yep. So you could see that there was a gap from even there was the first gap here, then we had another gap inside here, and then another one up there. So now, how would I have known where to play? I've told you, you bring out a Fibonacci tool, and then you draw what from swing high to swing low. So this was it, premium level. So you are looking at for if the imbalance is this much, right? If you don't know the one to play, just bring out Fibonacci to look for the one that is at what premium level. So premium level was 1.50 and above, right? So if I saw this, I would have said, okay, nice. So I'll have my premium level here. So I'm looking at for what the imbalance that is inside what the premium level, right? So this was the one I would have played. Just as premium level. I wouldn't have played this lower one, the one above, because I was premium level. So you can see if I did that, my stop loss were above this high, right? Just above this high. I'm targeting with all these lows, right? So I put out to bring out my short to position to just my entry here, stop loss above that high. That would have been let's say that's about 164. So looking at the target, that I know some of you would have been like, this is small, but look at your target. Target would have been where, firstly, I was targeting this low here. This low, that would have been 1:2, right? 1:2 is a good investment, if you ask me. So I'm targeting with this point here, and finally with this low. So you understand that we have been 1:2.55. Did they hit? Because did hit? It did. Amazing. Boom. Price hit tapped it perfectly. Although it did not clear it, but it tapped that PSL perfectly. Just tapped the right thing. I would have put my take profit here and have been an amazing trade, right? So this is how the fair value gap is traded, and you could actually maximize it. It works on whatever time frame at all, and you find yourself, right? So that would have been the amazing entry. Let us see if I could see anything on 3 minutes, and if I can't find, then call it a day, right? So that was a beautiful one, and it was amazing. So let us see if you can just look at just one last example. All right, now so far this is Forex. Now remember the same concept that we use. So look at this chart clearly. Just look at what I'm showing you. So this one will be so easy. All right, this is Forex, right? So now look at what I'm showing you. The same concept applied. I'm just showing you the entry patterns, right? I'm not just doing top-down analysis, right? Look at this. So we had from here, so we look at see the BSL here. This is relatively equal lows. So there's still the future, right? So I think we had a sell reason on the bigger time frame, right? I'm just showing you the entry pattern, right? So we had our SSL at this point here, so we labeled that SSL, right? I'm just showing you the entry patterns. I'm not going into top-down analysis and all of that, right? So we had this, right? So now, where was the BSL, the buy side liquidity? Yeah, of course, this relatively was equal highs. So you could see that was our BSL, right? The same concept I'm just showing you. This is how we trade the favor gap. You can use it as an entry confirmation for your trades, right? If you have a reason you want to sell the market, maybe on your bigger time frame, right? So you could use this as an entry criteria, right? Or I've thought of other models, but I'm showing you this model, which was beautifully taught by Michael J. Hudson. All right, this is his credit, is his work. I'm not the one inventing this and all that. So I had our BSL here, right? So you can see what price trade above the high. Was there a short-term break? Yep. Got this break of structure, right? Market did what? Displaced what? This low, right? So market displaced that low. Did this come back? Yep. So we had a market break of structure or shift in market structure. Where was that fair value gap? Very beautiful. So fair value gap was just from here to here. So yeah, draw it or extend to the future. Beautiful. So all right, so that was it. So markets, did it come back? Yep. Traded back there. Now, since that was it was also been at about 2, was it also at premium level? So measure from here to here. So you see, it was at premium level above the 50% for a sell scenario, the same thing. So I could not find for buy examples, just sell, just a reverse for buy, right? So beautiful. Market, since there was only one value gap here, but I've played that, my stop loss should have been where maybe if you are trying to be conservative, you have put your stop loss above this candle that created the imbalance. But for me, I will have put my stop loss all the way at this swing guide because markets, could trade and try to, push into. And you could see a price king was and heavily did what rejected at that point. And the price hit our overall targets. Did it? Let's see. It did. So overall target was hit here. So bam. So let's assume that your stop loss was just above that candle. You wouldn't have been this is from benefit of hindsight now. So if your stop loss was just above that candle after the imbalance, you would not have been hit. You would have made an amazing 1:9 or 1:9.56. Right. But if your stop loss was above the week, like I would have done for me, and I put my stop loss just above here, I would have said that was about a 30 pip stop loss, right? So if you are taking 30 pips to make all this, it's a good trade for me. So this is a 1:3.65 or 66. Amazing. right? So kudos to Michael Houston for teaching out all this for free, and I am very grateful. All right, so that was it. That was it. So let us see. I can even see another entry here. So look at another entry that the markets gave in case you miss the first one. So that was also buy side liquidity here, which was captured by these consecutive candles, right? So I'm looking at this, I think I can see a tiny favorable gap here. So there's a kind of tiny favorable gap just in between this point and this point, right? So if you play that, right, which was in line with that other block, right? This was an other block that took us over what I call an institutional candle, right? So if you play that week, your stop loss was above here, we have still gotten an entry at that point. Let's see your out from that place. So I'm not showing you how this now course, right? You must know where the market is going on the long term, not just randomly trading favor gap, right? So stop entering the favor gap, stop loss for me above maybe the candle that created the imbalance. So those you got the candle that made the imbalance, this red candle, all can be above that week, right? So remember our target is still that overall. We can target here for firstly, for me 2.47 and then overall 3.5. So we have seen that even though you missed this, we have still done what caught another entry. And did it hit TP? Yep, it did perfectly. So that is how you trade fair value gaps, right? You are trading with information that is based on the delivery patterns of price, right? Based on delivery patterns of price. Right. So this is all for now. Do well to subscribe, like, whatever, just to encourage me. And if you have any question, just drop it in the comment section, right? Please watch the previous that I made on daily biases, right? To help you to understand how to apply this, right? So you can use the fair value gaps for confirmation. Maybe you have a reason to buy a market or a sell market. You can use that confirmation, right? You don't just do it isolated like that. You must have a reason on the bigger time frame to buy. Is it a bearish market? Is it a bullish market? Is it trend bearish or bullish, right? And is the bias of the day bullish or bearish? Has price taken out a daily high, daily low? Those are the things you're looking at for the bigger time frame, right? So watch my previous video I made on what liquidity and price magnets, right? It was a free class I had for the I held for both my mentorship students and all of that. So do that to like, subscribe, whatever, just to encourage the channel. So see you in the next video. Until then, like my co-hosting will say, be safe.